Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide online divorce mediation and valuation services in St. Louis, Missouri. Today, we will discuss business valuations and changes in the IRS for 2022 with a former IRS auditor, Mike Gregory. Mike Gregory is the founder and owner of Mike Gregory Consulting, LLC. He brings 28 years of experience with the IRS in a variety of capacities. During his last 11 years with the IRS, he was an IRS territory manager with responsibilities for up to 23 states, with an emphasis in business valuation and specialist issues nationally. He's also was involved with creating and talking to the IRS about the discounts for lack of marketability and also reasonable compensation. The other book that he has written is called The Collaboration Effect, which basically brings together neuroscience and kind of negotiation techniques in order for you to work with the IRS if you needed to in some capacity. If we're looking specifically for business valuation experts, what are some things that we should make sure we include or do in this process? I mean, obviously, engaging a mediator or somebody with negotiation training, such as yourself, with an IRS background seems like an amazingly efficient, effective way to deal with it. But what other things should we do as business valuation experts to avoid this IRS audit or exam and process?
Well, in your question, you said we might be aggressive. I would encourage you not to be aggressive. I would encourage you to be reasonable. Like in the Michael Jackson case, the court decided which of these two is more reasonable. I'm going to take that approach with maybe tweaking it, but I'm going to go with the most reasonable. So when I was at the IRS with this litigation group, I said my appraiser would put together an appraisal, and I'm now reviewing it, and I would push every assumption inside here. And I want to give the benefit of the doubt to the taxpayer on the assumption. So if we had a range here, I want to say, what's the benefit of the doubt we can give them? What are you most comfortable with? Then I'd say, I want to ask you some more questions. I'm going to push you maybe even a lot of your comfort zone. But that's what I did at the IRS, so that we had a reasonable number. The court could say, yeah, you really have sound rationale for whatever variable you chose in your putting together the analysis for this appraisal. So the first thing is you want to be reasonable. That's really key. And you want to come across as being reasonable. Then within your report, my commentary, you made this commentary earlier, I review through reports like this for folks, and then I critique them, and I edit inside with Word. Sometimes we use language which can be inflammatory. We don't even realize it is. And sometimes we say things that's not exactly what we meant. And then I might put comments in here that you can elaborate on this. Like, for example, on reconciling the DLOM. I'm recommending you have at least 3 methods. In the job aid, they list about 25. And of that, there are a dozen or so the service recommends. And they critiqued all these methods. And they said what the pros and cons are, and how they've done in court, a number of different things. So you use a given method, let's just say the Mandelbaum factors on restricted stocks for DLOM. You can come through this and say, on this particular method, I'm giving it either more or less weight. You can look at the IRS job aid for why you'd give it more or why you'd give it less. You can say, that's why I did this. And you have a paragraph on each of those 3 methods. And then you come back in and you say on the bottom one, now I've taken a look at these 3 and I've now given the most weight to A and some weight to B and less weight to C, and my overall number is this. They're looking for something like that. A lot of people just have a boilerplate on DLOM. They throw in their boilerplate on methods, and they come and say, and my number is this. And the IRS person is going like, well, how did you ever get that? I mean, what did you do? I mean, it's not clear to me. So taking the time to put yourself in their shoes of they don't know you, they don't know anything about your report except what's here, and they've seen a lot of reports. They've done a lot of auditing. So how they would look at it, that's how I look at it. How would they look at it? And then put the report together the way they want to see it. That's educating them judiciously the way when we went to court, we always reviewed the judge ahead of time. All their cases on anything to do with valuation. And we had the judge say, for example, 6 judges have said, I do not like pre-IPO studies for DLOMs. You can get that number to be anything you want. How soon before the actual event you're going to choose a week, 2 weeks, a month, 90 days, whatever, different dates. And you can get any number you want. So we're not giving that any weight. So I'm in here. That's like putting nails on a chalkboard for a judge. So if 6 out of the 16 judges have said, I don't want to see that in my court, you know what? We're not going to put that in there because we don't want to irritate that judge. Well, that having been said, I'm back in here now with, as you think about your report, you mentioned the 1-page summary. I had $1 billion estate. They had about 100 appraisals. And there were 8 different appraisers. And they gave me 8 reports that were called, not drafts, but preliminary reports for their client, the attorney. The attorney sent them to me and said, Mike, I want you to go through and critique these. So I'm not doing a review like a formal review for a qualified review, but I'm critiquing them. And I'm putting things in with a Word document, and I'm also putting comments on the side. And I said, these are the things I think you need to do to elaborate on or expound on or clarify this or whatever. Well, that goes in, that comes out a final report. When the final report came back in, I told my client, get all the final reports in, and then go back to those 8 appraisers, and for each one say, give me a 1-page summary of that report. So you decide now what's most important. First of all, in this particular appraisal, there is no tax impact. That is, it has no impact on the estate, because some of the things that are in the estate may not be, they're in the estate, but they're not part of the value for estate purposes. So first of all, is there a tax impact with this appraisal even being audited? The answer might be no. So you want to say, yes, this has an impact on the estate. And then you ran through what? You came through, you said it's a valuation as of a given date, and it's this value for a controlling or non-controlling value. You also said how many shares and the percentages. You're just giving big pictures. And then you said you used 3 methods, and you gave the summary of the 3 methods. We had an income approach. We made modifications to these 4 things, whatever that is. And we used a discounted cash flow, and our discount rate was, and our growth rate was. And then you used a market approach. You might have said, we used actual guideline companies. And we looked at initially 20, we narrowed it to 5, and we ended up using 4. And this is what we came up with as a market approach. And then you said, we looked at the cost basis approach. So we looked at the cost basis approach. We came back and said, it's not applicable here. Or you said it is, and they're actually a real property or a state or oil and gas or mining appraisals are attached. Because I didn't do that. I'm not an expert in that.
Right.
Whatever you did, and then you reconciled them and came up with this number. And then you said we looked at discounts, the DLOC or the DLOM. And here's what I came up with the DLOC, and I used these methods or this method. And my DLOM, I used these methods, and they gave me this, this, and this, and my final DLOM is that. So my final conclusion of value is something, and it ties into what you just told them at the top.
Mm-hmm.
You say, how much can I get on one page, 8.5 by 11? I'm not saying go to a font of 8.
Right.
Maintain the same font, 11 or 12 or whatever you use. But what are the key points? Now, with 100 appraisals, when they classified these things nationally, I can guarantee you for $1 billion estate, they looked at every one of these. Mm-hmm. And if you gave them that 1-page summary, and the 1-page summary, they then checked that 1-page summary with the report, and it tied in. Everything in there was right. Well, that says to the national classifier, I can classify these relatively quickly. I've got this information all summarized on this 1-page loose that's inside the cover that goes with each one of these. And as a result of that, the national classification, I'm sure for $1 billion estates, had sent it off to the local office. And when they got that, the local office, they knew about this. I mean, $1 billion people, there's not a lot of them out there. So if this came into St. Louis, you know who your $1 billion estates are or above. So I'm sure they said, oh, wow, looking forward to this. Let's classify this. So the estate and gift tax attorneys, they're looking at this, and the IRS valuers looking at this, and they go through and say, it looks okay. It looks okay. It looks. They got through all it. I actually know in that particular case with $1 billion estate, they were never audited. They were classified twice. And I'm sure they looked at the information in there, but they never contacted the estate tax attorney because they said, I have everything I need here, and they appear to be reasonable with what they've done. I've done that with a $500 million estate. So I'm coming back and saying, if you are reasonable and you explain what you've done and others can understand that, you could avoid the whole audit in the first place. That's, to me, the real key. So any given month, I do 1 to a half dozen of these. I just did one for someone on the West Coast. I just did one for somebody out of Michigan. I did 6 of these for somebody out of Michigan. So I'm not just doing that to promote myself, but I'm saying get someone who can understand this. And after you've done one of these, or they've been done, you've had 2 of these done or 3 of these done, you got the hang of it now.